I told the exception. Take the credit in the sense you should pass the journal entry, this one. When you receive the goods in lot, on the receipt of last lot, you have to pass this tax entry. This is called as availment entry. We call this one as availment. This is account. Is GST account, CGST account if it is interstate. If it is interstate, IGST. If it is union territory transaction between the union territory, IGST. Within union territory, UTGST and CGST. Okay. Then with respect to capital goods, the tax whatever you have paid on the purchase of capital goods, you have the two options. If you are taking the credit and adding to the capital asset, you cannot claim ITC of that tax. ITC in the sense, once again, let me be clear. ITC in the sense, passing of this journal entry. I mean to say, debiting the whatever the tax you have paid. It is called as ITC. ITC is nothing but passing the purchase entry, be it input of goods, input of service, or capital goods. On purchase, whatever the tax you have paid, that is called as ITC. Okay. When capital goods has been purchased, example, machinery account. If you purchase the machinery, if you have paid the tax 6,000 and the value of the machine is 1 lakh, total 1,12,000 if you happens to make the payment to the supplier. If you include this tax of rupees 12,000 in total in the cost of the asset on which you claim depreciation, if you claim depreciation, you cannot claim ITC of that. Two benefit is not allowed. Either you have to add to your asset and claim depreciation on that. Otherwise, exclude the tax component from the value of the asset. Consider only the basic value and claim depreciation on that, and claim ITC with respect to that machine as per the rules prescribed for that. Okay, for both input, when I say input, you should consider it as input of goods as well as input of service. Input and the capital goods, the availment and its utilization are different for both. Whereas in case of input, subject to those two proviso, what are those? When the goods have been received in lot, on the receipt of last lot, you should consider the ITC and you should have made the payment of value along with the tax to the supplier within 180 days. In that case, you can claim ITC. In the same tax period, that means if you have purchased the goods in the month of August and you have met all the conditions, you can claim ITC during the month of August itself. Whereas in case of capital goods, if you have purchased the capital goods in the month of August, you made the payment also. In that case, whatever the tax which you want to claim it as ITC, it has to be spread over a period of 60 months. How many months? 60 months. This SGST and CGST has to be spread over a period of 60 months. Each month, while making a payment of your output tax, you can claim one part as your ITC relating to capital goods. Did you guys understand what I meant? Understood or not? Please repeat it, sir. See, in case of input and input service, when you purchase the input and you met all the conditions of availing the ITC, and in case of service, input service, you can take the credit in the same month in which you satisfy all the conditions, and you can set off those input tax whatever you have paid against your outward liability or output liability in the same tax period. Whereas in case of capital goods, if you decide to take ITC of the capital goods, the tax paid on capital goods with respect to the particular tax period in which you have purchased, the tax paid on that capital goods has to be spread over a period of 60 months. Each month, while making your output liability or paying your output liability, you can set off one portion of your ITC paid on capital goods against that. Whereas in case of capital goods, the tax means GST paid on capital goods has to be spread over a period of 60 months. That means 5 years it has to spread over. Each month against your output liability, you can set off the tax paid on capital goods. Example, if your output liability for the month comes to 2 lakhs and your one month GST paid on capital goods comes to 20,000, 2 lakhs minus 20,000, 1,80,000, you can make the payment. Understood? So that means for computers and others where the rate is more than 20-25% depreciation, it's better to add it to the tax asset and claim depreciation. On a practical way, we normally don't suggest to add the tax paid on capital goods to the cost of the asset. We always tell them to claim it as ITC. Okay, sir. Okay, because depreciation is deductible and the tax on that is only available to the extent of 30% maximum tax for the companies. It is 30% assume. 70% is disallowed. Actually, but whereas in case of duty paid on capital goods, if you set off, it is fully allowed. Fully allowed means you can claim the 100% of tax. Okay, that is what they mentioned here. Depreciation claimed on tax component, ITC not allowed. I said no, either one. Either you can claim depreciation or you can claim ITC. Okay. Next, mark this one as important. Due date to claim ITC. Mark that one as important. Okay. Assume you have purchased some goods on 10th September 23. You purchased the goods on 10th September 23. Okay. You forgot to take credit of the tax. Whatever the tax paid on that, you have forgotten. You forgotten means your accountant missed the entry for the tax. Then what could be the avenues available to me to pass the entry of the tax paid? Okay. Can I claim the deduction? Can I claim the ITC on the same? Or I am not supposed to claim the ITC? The question arises. The law says that when there is a miss or when ITC is not availed, you can avail the same. You can avail the same. First one, within the due date of filing annual return, or due date of filing return for the month of September. For the month of September means for the month of next September, after the year. For the month of September, whichever is earlier. Whichever is earlier. Example, today you have purchased the goods, you met all the condition, but you forgot to pass the entry for the tax component. That means you made an entry for the purchases 1 lakh, supplier 1,12,000. Instead of debiting your GST account, you put it in a suspense account. Example, suspense account 12,000, because you are not sure what kind of GST to be recorded. At the end of the year, audit happens. By the end of the audit, assume that audit ends on next year August. In that case, the auditor identifies this error has happened. Now the question arises, can I claim ITC? The answer is yes. If so, within what date I need to claim? The date specified is within the due date of filing annual return, that is 31st December of next year. Next year means the year in which you have made the error. For that, next year is for this 23, you should make the annual return within 31st December on or before 31st December 24 for the period of 22-23 transactions. That date or month's due date. September month's due date is 20th October. Next year, 20th October. Of these 2 days, whichever is earlier date, you need to not the due date within the date of filing actual return, not the due date. Okay. Within these 2 dates, of these 2 dates, whichever is the earlier date, you need to claim the ITC. Now you may ask me, sir, always October comes first. Obviously October comes first, but few cases you can file the annual return even before the October month. In that case, that date becomes the earlier date. Within that date, you need to claim the ITC. If you do not claim the ITC, you don't have any right to claim it after that date. You are not eligible. Okay, that is what they have mentioned here. See, a registered person shall not be entitled to take input tax credit. Shall not be entitled to take input tax credit in respect of any invoice or debit note of goods or services or both after the 30th day of November following the end of the financial year. Day. I will go back to that once again. First, let me complete. Invoice or debit note pertains or furnishing of the relevant annual return, whichever is earlier. Provided that the registered person shall not be entitled to take ITC after due date of furnishing the return under section 39 for the month of September 2018 till the due date of furnishing the return of the said section for the month of March 2019. These are all old ones. Okay. 1st October 22 wire notification CT dated this one. Finance Act 22 for due date of furnishing return under section 39 for the month of September they have mentioned. Are you guys able to see this one? Yes, sir. With respect to time limit to avail ITC, it may be noted that the annual return for the month of September is to be filed by 20th October and annual return of your financial year is to be filed 31st December of the succeeding financial year. Whichever is earlier date, you need to consider. Okay. One more second. There is a supplementary. We have to see whether have they mentioned anything. Supplementary study paper. In that, if they are mentioned month of November, we should take that one only. Person shall not be entitled to take input tax credit in respect of any invoice or debit note for the supply of goods or services, or both after the 30th day of November following the end of the financial year to which such invoice or debit note pertains. That means September month due date October I mentioned, no, it is not that one. Within 30th November you need to claim the deduction ITC. Otherwise it lapses. You cannot claim ITC. Okay, this is correct. This is correct. That means what I told, due date filing. Or 30th November of next year. 30th November of next year. Within that time, you need to claim deduction. I mean, you can avail the ITC. See, this one they have given the illustration. Please go through that illustration, which I explained now. 30th day, 30th of November, or due date of filing, or the actual date of filing annual return, whichever is earlier. Just now I explained now. On that they have given the illustration. Please go through that. Okay. Restriction on availment of ITC. Restriction. One second, I will. But I don't know why this is a restriction. Now this restriction is not there. Until last year it was there. Okay. You might get question on this, especially new scheme. For old scheme only one answer. They give the answer 5%, up to 5% of whatever the ITC as per GST or one, and whatever you have availed, whichever is less on that, you need to claim. Let me explain everything. This section tells about how much is ITC you can avail. Example, assume that you have purchased the good from 5 customers, 5 suppliers. Okay, the value of the goods comes to 10 lakhs from each supplier. That means 50 lakhs worth of goods you purchase, on which you pay 12%. That means 6 lakhs ITC tax you pay on them. 50 lakhs into 12%. Okay, that means 1,20,000 from each supplier. Now just think, out of 5 suppliers, each will declare their sales correctly. Before that, you guys need to know how this GST works, right? See, you purchase the goods from suppliers, right? Supplier A, B, B, C, D, E. You purchase them. 10 lakhs into 12%, 10 lakh. This is value GST total. Okay. In a year, you make this much of purchases. I will not take this one as year, for the month, so that I can explain you in a better way. For the month, you make a 50 lakhs purchases from these 5 suppliers total. Once the month end gets over, each supplier has to upload the value of their outward supply within 10th of next month. Example, for the month of August, September 10th, they need to upload whatever the supply they have made for the month of August in the portal, in the GST portal, within or on or before 10th of next month. Assume that all these 5 people or supplier will upload without any delay or default. Okay, if that be the case, you will get to see all these details uploaded by the respective suppliers from 11th to 15th of September month. September month I am taking for the example of August. Okay, 11th to 15th of the next month, you will get to see what are all the suppliers from whom you have purchased. Have they uploaded the value of supply made by them? If yes, the same amount of tax is also reflecting in the portal. In that case, there is no issue at all. You can claim all 6 lakhs as your ITC for the month of August, and you pay after setting of this 6 lakhs. The difference, if any, you have to pay to the government on or before 20th of September for the month of August supply made by you. This is clear picture. There is no what is that? Challenges. assume that out of these 5 suppliers, supplier E will not upload the supply made by him. Assume that he will not upload entire amount, he will not upload. Now, you have purchased the goods from him, you have made the payment to him also, but he has not uploaded the value, hence he will not pay the tax on that. What are the 4 conditions we saw for the availing ITC? One is document invoice, he has given the invoice. Second one, you have received the goods also. You have made the payment of value along with the tax also within 30 days only, assume. Next, he has not paid the tax to the government. Hence, you cannot claim ITC. Because of his fault, having complied all the conditions of payment making, document, receipt of goods, everything, when he did not make the payment to the government, you become the victim or sufferer. In that case, you cannot claim ITC to the extent of 1,20,000 of the ITC which you paid for the value of goods you received from E. For that very reason, to remove the hardship of the recipient of the goods, government has given some relaxation in the sense, some what is called the minimum you can claim. What it says is, whatever it has been uploaded, when the supplier will upload, he will upload in the form GSTR1. He upload all the details in GSTR1. The same thing will be reflected from next month 11th to 15th as GSTR2 or 2B we call it as. Whatever it is reflecting in 2 or 2B, of that adding to the 5% of that GST amount, or whatever the GST is reflecting in your books, whichever is less, to that extent you can claim ITC. Not understood. That means whatever it is reflecting in the GSTR2, it is reflecting 4,80,000. Of that 5% is 24,000. If you add these two, 5,04,000, it is you can claim ITC, or ITC as per your books. ITC as per books is nothing but you have included this 1,20,000 also, no? That means 6 lakhs is reflecting in your books, because you have made the payment of 1 lakh plus 10 lakh plus 1,20,000. That means 11,20,000 to that supplier E. Hence, entire thing is reflecting in your books. That means 6 lakh full amount is reflecting as ITC in your books. Of these two, whichever is early, whichever is less, you can claim that amount as your ITC. Okay, that is what this provision or this section, or sorry, this rule 36(4) explains. Only up to this year this is applicable. From this current year 23-24, whatever it is reflecting in GSTR2, only that much you have to claim. Okay, now I have given the for some problem. We will see that one. Illustration, I have given the illustration of rule 36.4. Supplier will upload supply made to you on or before 10th of next month in GSTR1, and the same will be reflected in GSTR2A. Now it is called as 2B. Payment is 2B, 2 or 2A. Okay, from 11th to 15th of the next month, it will reflect whatever he uploads. It will reflect from 11th to 15th. Okay, I have taken 4 cases: case 1, case 2, case 3, case 4. Each case is different case. Input means input of goods. What is the invoice number? This is invoice. What is the GST you have paid? You have purchased from X Limited in so many days in a month. Invoice number being this much, 1001, like that. I have taken simply ad hoc numbers. Okay, all these are imaginary numbers. You have paid a GST. Total GST you have paid 60,000. All 60,000 he has uploaded. Okay, this one, case 1, case 2, case 3, case 4 are uploaded figures. Okay. Likewise, in case 2, he has not uploaded the invoice number 1002. Okay. In all other cases, he has uploaded like that. I have taken 4 suppliers: ELMX Limited, AB Firm, Anand Enterprises, MNO Limited. It's all imaginary figures. Okay, wherever there is a dash or blank, it is meant that those supplier has not uploaded the invoices in the GSTR portal, GSTR1. They have not declared the supply. Okay, total you are eligible if all are happen to upload correctly. You are eligible to claim 2,30,000 as ITC. In all these 4 cases, they have uploaded. In one case, all suppliers have uploaded all the invoice. In the second case, they have uploaded only to the extent of 1,55,000. In third case, they have uploaded to the extent of 2,26,000. In fourth case, they have uploaded to the extent of 1,91,600. Okay. Now the question comes: how much ITC you can claim? The question. You are eligible for 2,30,000. Uploaded is this much. Okay. See, ITC available. ITC available to the extent of ITC reflected in GSTR 2A plus least of 5% of ITC reflected in GSTR 2A or 2,30,000 less ITC reflected in GSTR 2A. That means just see the difference. This is, you can avail this much minus difference is how much is the difference? 75,000. That means to the extent of 75,000 they have not uploaded. In case 2, we will see 75,000. 24,000 plus 45, how much? 24 plus 45 is how much? 24 plus 45, how much?
69.
69. In case 2 plus 6, 69 plus 6, how much? 75. They have not uploaded 75,000 worth of GST invoices to the portal. Okay, that is the difference I am getting, 75. Like this, I arrived at the differences. Here it is 75, here it is 4 only. 2,30,000 minus 226, 4. 230 minus 191, 600 means 38,400. 38,400. The difference of these not uploaded invoices difference against the invoice eligible for ITC. That is the difference. These are the invoices uploaded. This one you are eligible to claim. Of this, whatever is not uploaded, I am taking the difference. And I am adding 5% to this. 5% to this is how much? 2,30,000 into 5% is how much? 2,30,000 into 5%, how much?
11,500.
11,500. Likewise, 1,55,000 into 5%. 226 into 5%. 191,600 into 5%. Like that, 5% you calculate on the amount uploaded. Calculate 5%. Uploaded. 5% of the invoice uploaded. 2,30,000, 155, 226, 191, 600. 5% you calculate on that. Or the difference of what you could have eligible to claim minus uploaded difference. That means we have arrived at 75,000, 4,000, 38,400, that difference with the 5% of the uploaded amount. Those two difference, how much? In that case, whichever is less. Here, the difference between the case 1 and 2,30,000 eligible, 2,30,000 they have uploaded. Is there any difference in these two? Is there any difference?
Yes.
Is there any difference between these two? 2,30,000, 2,30,000? No difference. 5% of 2,30,000 comes to 11,500. Zero, difference is 0. 11,500, whichever is less, which is the least one? Are you guys able to follow? See, first we need to consider how much you are eligible. 2,30,000 you are eligible. That is in all 4 cases you are eligible to claim ITC 2,30,000. In first case, in scenario, all supplier have uploaded all the invoices. Then there is no question of restriction arises because everyone has uploaded. It is also reflecting the same, and it is also reflecting in your books the same thing. There is no difference at all. Hence, 2,30,000 you can claim it as ITC. In the second case, 1,55,000 invoices has been uploaded. That means 75,000 worth of invoice not uploaded. Now, the difference is 75,000. How you got? 2,30,000 minus 1,55,000. That is the difference. 75,000. That is one figure, 75,000. Now, calculate 5% of 1,55,000. How much? 5% of 1,55,000. How much?
7,750.
7,750. Compare 7,750 with 75,000. Which is the least?
7,750.
7,750. To that extent, you can claim additional ITC along with 1,55,000. 1,55,000 plus 7,750. How much? $162,750. Right? 1,55,000. 1,55,000 plus 7,750. In the next case, 2,30,000 minus 2,26,000. What is the difference? $2,30,000 minus 2,26,000. What is the difference?
4,000.
4,000. For 2,26,000, 5% add. $11,300. If you add 11,300 to 2,26,000, it becomes more than 2,30,000. Hence, your ITC should restrict to 2,30,000 only. Next case, 2,30,000 minus 1,91,600. How much? 2,30,000 minus 1,91,600 comes to 38,400. 5% of 1,91,600 is how much? 9,580. Out of these two, which is the least one? 9,580. Add that 9,580 to 1,91,600. Claim ITC to that extent. Understanding? Then what is the total ITC you can claim in these scenarios? In first case, you can claim 2,30,000. In the second case, you can claim 1,62,750. Though you are eligible for 2,30,000, you cannot claim in the second case full. In the third case, 2,30,000 you can claim. In the fourth case, you can claim 2,01,180 as your ITC